I am pleased to welcome you to the 2020 Western CUNA Management School awarding of project honors. It has been a particularly challenging year, and all students completing their projects this year are to be commended given the increased challenges and responsibilities brought on by the pandemic. We at WCMS hope you, your families, and your credit union families are safe. WCMS projects are the hallmark of the Western CUNA Management School education. The projects require our students to take the academic concepts from the classroom and apply them to the reality of the credit union experience. Students invest over 100 hours in each of Project 1 and Project 2, and the returns to the student and their credit unions are both immediate and long-term. Many students' professional careers are permanently altered through their experience in completing their projects. Further, credit unions benefit both from the specific business plans and ideas developed within the projects, but also through the development of the leadership potential of the student completing the project. It is not an overstatement to say the process of completing Project 1 and Project 2 permanently changes the professional decision-making and leadership of the student. Project 1, completed between the student's first and second year at WCMS, requires a critical evaluation of the current position of the student's credit union and its membership. Project 2, completed between the student's second and third year at WCMS, requires students to create financial projections, strategic goals, and a business plan for the future of their credit union. Each year, WCMS acknowledges student projects that are uniquely deserving of distinction. The school designates exemplary projects with the distinction of honors. Each year, there are also a subset of these projects that are so truly superlative that they earn the distinction of high honors. Students earning honors or high honors on their projects have gone on to distinguished careers in the credit union movement, and I can say with certainty that we expect great things in the years ahead from our awardees this year. I am pleased to share the awardees now. Earning honors for Project 1. Gil Amundsen. Megan Barrett. Dana Bedwell. Jamie Campanella. Mark Cardella. Tina Covington. Brittany DeVries. Erica Espinoza Doy. Marissa Howard. Angie Nips. Monica Labor. Kelly Mobley. Carl Murphy. Amen Avia Soji. Roni Peraza. Maya Pino. Sarah Roman. Farron Shoemate. Matthew Stringham. Crystal Terwilliger. Christine Turner. Thomas Vonishin. Vanessa Wagoner. Earning the distinction of high honors for Project 1 are Amara Aiello, Ryan Brown, Jordan Gray, Christopher Hibbs, Jessica Jameson, Gina Jorgensen, Cheryl McCarthy, Benjamin Metzger, Tiani Moses, Aaron Pitroff, Ian Wiggins, We now turn to Project 2 honors. The following students have earned honors for Project 2. Katie Adams, Adriana Alexander, Ariana Balch, Jethro Casinas, Kevin Cole, Lori Fink, Grace Flores, Laura Hansen, Emily Hawkins, Eric Neatsnit, Ellie McIntyre, Andrew Marawa, Douglas Newell, Kim New, Rachel Nielsen, April Odlum Cheng, Antoinette Olivas, Heather Paget, Laura Patterson, Susan Rice, Dustin Rhodey, Austin Schock, Aaron Sujimoto, The following students have earned high honors for their Project 2. Brody Cook, Kevin Davies, John Granato, Jonathan Holland, Jess King, Nina Myers, Athar Nazir, Diana Nellis, Andrew Redding, Kent Richard, Abi Selassie, Corey Sirachi, Bradley Ticknor, Neil Weber. Congratulations to all of our 2020 Honors and High Honors Project recipients. The highest honor WCMS confers on the Project 2 is the Rick Craig Prize. Rick Craig was a credit union icon, Herb Wagner Award recipient, WCMS alumnus, and longtime member of the faculty. His role over the decades developing the project requirements were instrumental in maximizing the usefulness of the project experience for students and their credit unions. We now turn to the conferring of the 2020 Western CUNA Management School Rick Craig Prize for Excellence in Project 2.
Good morning, everybody. What a great honor. It was so wonderful to see all of your smiling faces, and congratulations to all of the Project 1 and Project 2 honors and high honor recipient. Every year I have the tremendous honor of getting to read the best projects that our readers have sent to me for the Rick Craig Prize for Excellence. As Michael said, Rick was a stellar, longtime instructor. He was the one that actually created the project. So when you hate the projects, it was Rick Craig, but those projects all made us better. I got to read the project submitted, and it is the hardest job I have to do every year is to select the one, because you all put your heart and soul into the work. This project that I read probably was the best project I have ever seen. And part of it was, not only was the project spectacular, but this individual went back and in every section addressed COVID because after he had already finished. Oh, I got a he instead of a she, sorry. Finished that project. I would like to now congratulate and announce the Rick Craig Prize for Excellence, Abi Selassie from Schools First. And here's your award. I hope you can see it. I don't know. Does that work? Am I crooked? All right. So congratulations, Abi, and we will send this to you. Great job.
These distinctions are remarkable and noteworthy, and rightly deserving of a prominent place on each student's resume. There is one last distinction that all students completing the project can attain, and that is to take what you have learned and use it to better serve your members. Your credit union believes in you and expects leadership from you. Your colleagues, your members, your family, and your WCMS faculty and staff have invested in you because we believe in you, and we know what you can accomplish. It is only through going beyond the written analysis of the projects and actually applying what you have learned, then have you truly completed the WCMS project experience. All students have the opportunity in the months ahead to earn for themselves this final distinction on the project, that it inspired you and assisted you to making a concrete difference in the lives of your members. It is through your actions and your leadership that you unlock the full potential of your WCMS education, and it is your service to your members that fulfills the school's mission. I look forward to hearing how you have put your projects to use in the months ahead. And again, congratulations to all of our 2020 Project Honors and High Honors recipients. We now turn to the panel portion of our discussion today. We have 3 alumni that have richly put their WCMS education to use for their members and have become leaders in the credit union movement. I look forward to an interactive conversation in the hour ahead. I have some questions to get us started, but I encourage you, please use the chat box and I will add your voice into our conversation so we can make sure this is an interactive conversation. I will begin by introducing our panelists, although I trust and expect you have you've heard about them before. Our first panelist is Diana Dykstra. She is the president and CEO of the California Nevada Credit Union Leagues. She is a 1992 graduate and current president of WCMS. In 2001, she earned the James D. Likens Alumni Recognition Award for WCMS. And just last year, she was given the Herb Wagner Memorial Award. In addition to her many roles throughout credit union movement, she is perhaps best known as leading the team that brought us credit union direct lending. And she currently serves on the board of directors of the American Association of Credit Union Leagues to give us a sense of the system-wide perspective of what may be going on right now. Our next panelist is Eric Orellana. He is president and CEO of Comunidad Latina Federal Credit Union in Orange County. Comunidad Latina focuses on immigrants in the Santa Ana area, and it is the only credit union in Orange County that offers personal and auto loans to individuals with matricula consulares and individual tax identification numbers. He is a 1998 graduate of WCMS. He also served as president of the WCMS Alumni Association. Prior to his current role as CEO of Comunidad Latina, he served as CEO of Nikkei and Southern California Postal Credit Unions. He also served as Deputy Commissioner of the Credit Union Division of the Department of Business Oversight in California. So he brings a perspective of smaller credit unions, how this crisis is hitting smaller credit unions, and also has previous experience in the regulation side. And our final panelist is Matt Stevenson. You know him all as the finance guy, finance faculty member at WCMS. He is executive vice president at Rogue Credit Union. Prior to serving at Rogue, he served at Clark County Credit Union in Las Vegas. He was awarded in 2006 the Credit Union Association of Oregon Young Credit Union Professional of the Year. In 2017, he was selected as one of the top Credit Union National Association Credit Union rock stars. He is highly involved in his community. Among his many roles, he's currently serving in the Chamber of Medford and Jackson County Board and is a member of the Greater Medford Rotary Club. Matt, we're looking to you to give us a perspective from larger credit unions and also, as always, the CFO perspective. So thank you very much for participating. As I said, for all of our students, I'm going to ask you to please use the chat function, but I would like to begin with a first question. I know you each personally. If I didn't, you would intimidate the heck out of me. And so I thought it might be a nice way to start. If I asked you, did you have something that didn't go as expected early in your career? Did you maybe fail on a project or not receive an honors that you were hoping for early on in your career? And I wonder if you could say a few words about what you learned from that in terms of your professional development.
Well, since I'm the oldest one sitting on the panel, I guess I can talk about all of my failures. Uh, my life has been, I've been blessed with a great career and opportunities, but I will tell you that I've probably made more mistakes than most people, and I admit them. Because I believe that if you don't make mistakes, you will never learn to be different and learn new things. Certainly, everybody looks at credit union direct lending and going, that was a great thing. But as we went through the process, there were many things we did wrong and that we had to correct that made it better. So I just tell everybody, risk more and fail faster, and you will come out better for it.
I can go next. When you mentioned that, one of the very first things that popped into my mind was one of the first evaluations I ever got in credit unions. I'd been at the credit union, I guess it was about 2 years in, different credit union that I'm at now. And I was doing everything I could to push the department that I was in forward. But apparently I had not done a great job of helping support other team members around me, my peers. We happened to have a 360-degree evaluation process, and I got ripped more than I even thought was humanly possible. I think one of my peers actually said that it seemed like I was just positioning myself to take over the department and fire them all so I could do things my own way. So it was a really bad start to that, but I learned a lot from that. Fortunately, I never got a bad evaluation after that, but boy, it was a smack upside the head. So yeah, we've all had failures.
Thank you so much. And I think failure is the best teacher. I think that failure leads to success. Without failing, you do not learn. And Michael, we'll be spending probably 5 days at least if I just bullet point all my failures, because I have multiple failures. And we don't have to go back early in my career. Just a month ago, we made a mistake of mailing a marketing piece out of the credit union right before the election. Who would have thought about mailing a piece when you get all this mail? So, and of course we learn from it. And that's the important aspect of it, is not the failure itself, but what lessons you learn and how you can apply those to the future so you can do better.
Thank you. Will you please say a few words about how your organization is responding to serve your members in the crisis? Is there a program or story from your organization that you think particularly shows the difference that credit unions are making in the lives of our members?
At Comunidad Latina Federal Credit Union, we serve a very unique membership. Most of our members are undocumented. And because of their legal status in this country, they did not qualify for the federal help that the government provided to most citizens, the $1,200. And they do not qualify for unemployment. Most of them lost their jobs. So they were without a job and without any type of state or federal assistance. So we had to step in, and we did a lot of loan deferrals like many credit unions did. We ended up deferring 40% of our loans. But in addition to that, we were very fortunate that we were able to obtain a grant from NCUA. And that grant allowed us to provide direct financial assistance to our members. And there's many stories about the different individuals that we help with that money. But one that comes to mind right away is this one member. She's a senior citizen. She was working as a janitor, and her husband had gotten very ill prior to COVID, and they were about to be evicted. And we were able to give her a $400 grant that she didn't have to repay back, so she could keep a roof on her head and her husband for an additional month. And that's what makes us different as credit unions. We don't just look at the bottom line. We go beyond that as to how we can help members and make an impact on their lives.
Yeah, I guess I could chime in on this one as well. What a humbling experience 2020 has been for all of us. I'm sure we all feel that. And there has been no shortage of ways that we have tried to help our members. Rather, I think the pretty standard stuff of loan skips and proactive communication and reaching out with special loan programs and things like that. One of the unique things that I think we were able to do that is we were not only dealing with pandemic issues this year, but we also dealt with wildfire issues. And so we had several thousand homes in our area that were destroyed, including some of our employee homes and things. And so we engaged in the community in multiple different ways, but one of the ways is we became a trusted partner for donations, so that we ramped up our Road Credit Union Foundation and collected donations from the community and then put those donations back to work. And we're very fortunate to raise well over $1 million and put back into the community to help fire victims, which was awesome. But along with Eric, some of the small stories are the ones that really pull on your heart. One of my favorite stories is that we had a young girl that wanted somehow to help the fire victims, and she went and held a car wash and came in with a jar of cash into one of our branches to help the fire victims. And it's things like that that make you feel so responsible, right? That we're the stewards of that money, to make sure that it goes to the right places and to help the right people. And the trust that people like that put in the credit union movement is real. And it's humbling, but it's also very rewarding to then turn around and see some of the things that we've been able to do to help people that are struggling with very, very difficult times.
Certainly, as an association, we didn't have direct impact, but I got to watch the remarkable responses of credit unions in California, Nevada, and across the country on what they all did. I mean, we were a convener of information, because when COVID hit, everybody was scrambling, trying to figure out what to do and how to do it. And credit unions shared their knowledge, shared their best practices, helped one another getting the PPE, I don't even know what that stands for anymore, but getting all of the things to protect the employees, helping each other try to figure out how to manage a remote workforce. And I guess one of the things that I'm most proud of, and I can only speak for California and Nevada, but I know that it's happened in every state, our governor immediately wanted relief for consumers in California, and our credit unions didn't have to be asked twice. In fact, they were already in the mode. Banks and the community banks were fighting the governor on this, but we gave loan forbearances on mortgages of over $5.3 billion, skip pays on nearly $12 billion in consumer loans, and emergency loans at 0% and almost at $100 million. And I know that that was replicated state by state by state across the United States. And it's just so heartwarming to be able to watch the collective greatness that credit unions have. And so I just want to thank all of you for what you did.
I think another question would be, as we think about this pandemic, how are you changing your operations to respond both to the pressures that your members are facing, but also the kind of pressures that you're experiencing in your office? So Eric, you went first last time. Diana, I'm going to throw it to you first this time, and we'll go backwards.
Oh, all right. Well, we have been remote. I'll tell you a little story. So we had GAC, many of you know, all of associations. We were in Washington, D.C., came back. We were back for a week. And all of a sudden, and we were moving our offices. So we were moving 4 floors down, and the move was happening on March 20th. And on March 18th, the governor called that everybody was to stay at home order. So we have been 8 months and I won't tell you how many days, but I've been counting every single day. Our entire staff has been remote. Our office is there, and there are boxes in every office, but not a person. But again, it was remarkable how the staff just automatically figured out how to do their jobs remotely. And I don't know how many of you people had asked, can we work remote? What can we, and we had concerns about remote workers. We have now had 5 employees move out of state, and they're doing just as remarkable out of state and working remote as they did in the office. So mine wasn't as drastic as what Matt and Eric and certainly the rest of you have experienced, but it was awesome to see everybody just do their job and figure out how to operate in this new environment.
I guess if we're going backwards, I'm still in the middle, right? I'm in like an Eric Diana sandwich, which is awesome. I can't imagine two better people to be sandwiched between. That's fantastic. Yeah, so our experience this year, to give a little context, has been maybe a little bit different than others, in that 2020 was already supposed to be crazy for us. We were tackling a core conversion this year. So then you add on the pandemic and the PPP loans. We also got approached by the state to do some emergency relief funding, which is outside the norm, big operation. We also have a merger going on. We have a 35% growth rate. We had the wildfires. We actually had a branch wiped out by a flood. I could go on and on and on. So 2020 has been ridiculously crazy. So I shout out, I think, let's see, we've got Amy and Angie and Gina and Laura on from my credit union. Our folks have done amazing work. And then to tack on top of that, that most of them are working in what for most of us was a new virtual type of environment outside the office has been remarkable. On the purely operational front, we still keep our branches open. We did close them down early on in the pandemic for a couple of weeks, but other than that, we've kept them open and have really focused on trying to provide those essential services to our members that we need to. The volumes in our branches are just extremely high still. And so trying to even maintain social distancing for us in those instances, which we're doing, but it's been a challenge. Sometimes there's lines outside of our branches because they're so busy. And so closing them down would have really prevented us from providing some of those essential services to our members. And so we maintain them open, but the challenges that the pandemic presents with all of that social distancing and trying to do those things has added another layer that's very difficult. We have seen our electronic services ramp up dramatically. So we have a very large, we call them express video tellers, but they're ETM, ITM machines. We have a large network of those. We've seen volumes more than double on those. Call centers obviously are very busy. Our online banking applications, all those things have ramped up substantially. And so we don't anticipate that changing, but we also hope, unless things really change differently from government orders, to maintain in-person operations going forward.
Similar to Matt, we actually have seen an increase of electronic access to the credit union. At the beginning of the pandemic, we did not shut down the office. We're a single branch operation, and there's only 5 of us total. We occupy 785 square feet. So social distancing has been very challenging. And the 785 square feet includes the members' lobby. And a lot of our members operate just using cash. So for us to remain open was extremely important. We did reduce the hours at the beginning, but also the transaction volume went down. A lot of our members lost their jobs. There was no checks to cash, or they didn't have access to any funds. We split our team into 2. We actually took half of the staff, and we had 2 staff members come in 1 week. And then those 2 staff members will stay home and alternate and have the other 2 staff members come in. We did that purposely in case anyone became compromised. We will still be able to open the credit union with the other half of the team. And I was working remotely the entire time. And I was team 3. In case both teams became compromised, we already had a plan B in the background where I will come in, and I had somebody that was working at another credit union that used to work for us that will come and help us help members. It has impacted the business to a certain degree, but the impact has subsided quite a bit. At the beginning, we saw a huge decline in loan demand. We saw our members being affected quite a bit. But in the last 4 months, we have seen a surge of loan demand again, which is hopefully good news. Something that I'm still puzzled about, and if you had asked me at the beginning of the pandemic how this was going to play out, is not how it's actually taking place, it's our delinquency. If anyone pulls my last call report, and the one that we filed in September, my credit union reported 0 delinquency in reportable loans. And these are folks that are not getting any help, but they're trying to do just any job and getting any money they can get. And you will say, well, you're deferring most of the loans. No, actually, as of September, as of the September call report, all the first round of payment deferrals was done with, and members were making payments again. And on the second round, where people had to prove that they were financially affected by the virus, we only have 7 members. So it's a very small percentage of our membership. So there has been some very unexpected occurrences, such as the low delinquency and the low charge-off rate. I was expecting that to be much higher and for us to be actually going through some painful situations as it came to loan losses, but that has not taken place. And I hope that that stays the way it is.
Knock on wood.
Yes.
So we have our first question via chat. May I ask, do you have some specific ideas that you've done in your offices for team building with your employees? How do you kind of balance the employee safety and also the employee morale? Matt, why don't you go first this time?
Of course, you called on me first because I was really anxious to hear the answer to this one. This is a challenge in today's environment. You know, if you were to ask me what I see as the biggest challenge right now for us from a culture perspective, this is it, right? Is that the conversations that you have around, you know, for lack of a better term, the water cooler, right? The managing of walking around, you know, Friday afternoons, I used to like to just leave a couple hours on my schedule and just walk around, talk to people, just feel what was going on. And it's just not the same to Zoom call somebody on the spur of a moment, and they're like, why is Matt calling me? You know, it's just not the same. And so this is a challenge. But there are things I think that if I can give any advice here, the things that I've seen success on are the people that are intentional about it. You know, it does feel a little weird to call somebody just to touch base occasionally, but do it. Start the beginning of every meeting without jumping right into the agenda. If you're a red type A personality like me, that's torture, right? You're in a meeting to get something done. Let the first 5 or 10 minutes of a meeting be about what you did over the weekend. Let those things, so that those connections are really still there. And then, you know, there are some activities that you can do online, and some of them I think are moderately effective. But I think the biggest thing is to just be intentional about it. Don't assume that those relationships are going to stay intact with this much distance. And the other thing I think as leaders that we need to do is watch for those little cues that used to be really easy to catch up on. You know, when you're sitting in a meeting in a room and somebody sits back in their chair and folds their arms, you start to understand that maybe they disagree with something, or like Mike's doing right now, they're completely checking out, right? Just relaxed. But those are much harder they're much harder to pick up on virtually. You know, the eye rolls, you know, people can turn their camera off and roll their eyes, you know, and so pick up on those, watch those more closely, and stay in touch with people, so that because man, in every business, but even more so in the credit union world, those relationships are really what matter, and we've got to figure out a way to keep them strong even in a virtual world.
At the beginning of the pandemic, I made a point to call the staff that was working from home and make sure that I stayed in contact with them. And similar to Matt, you have to actually take the time to do that and actually allocate resources to that. One of the advantages of being small is with 5 staff members, we can still have meetings in person and practice social distancing, and we're all wearing masks. And I know that if I was at one of my previous credit unions, Southern California Postal or Nikkei, we have not been able to do that just because of the number of staff members that we had. But at Comunidad Latina, we take advantage of being small and having so few staff members that we still have that limited physical interaction, although it's at a social distance. So we have not lost that touch. And as a matter of fact, we reinstituted our monthly staff meetings 3 months ago. And we set up the chairs in advance to make sure that we actually do 10 feet opposed to 6 feet. So we take the entire office. But we do have those meetings, and they do make a difference. I think the staff is missing that human connection, and it is critical that we bring that either through a virtual environment or in person.
Well, we're a lot different at the league, and I don't have anything interesting to share, except that we are not an essential business. So we are not really allowed to be face-to-face at any time. And so we've really had to find ways to communicate. And I don't know about you all, but I'm Zoomed out and everybody's Zoomed out. But every week we have a call with all the staff, and we just talk about stuff. Our leadership team, in the beginning, we were meeting every day because things were just that fluid in the credit union space. But we make sure that we have 2 calls a week so that we stay connected. And mostly anymore, we're just talking about what's going on in our lives and celebrating birthdays and anniversaries. But it's tough. You know, at least you guys have seen some of your coworkers. We've just seen each other on Zoom. And, you know, we had a retirement, somebody that worked for us for 30 years, and it was so sad to celebrate. I mean, it was a great celebration, and we did things every day, but not to be there to give her a hug and thank you and but we're managing through it. You know, and it's going to be really weird when we're all face to face. I'm not sure how we're going to act. You know, how far away are you going to stay? You know,
Well, I'll have to start wearing pants again.
WCMS.
Yeah, I'll have to start wearing pants again, Diane. I don't know about that.
Well, I dressed up today.
I'm not standing up.
I was on an earlier call today and they were videotaping, and then they wanted us in formal clothes. And I'm thinking to myself, I wonder what people are wearing from the waist down.
You don't want to know.
And Diana, you might not think you're essential, but you're essential to us. As
Yes, absolutely.
I think you're an essential business.
Well, thank you.
I will jump in here very quickly, and then I got to catch up on chat questions. As a professor, I also, like, one of my main jobs to be effective teaching is to think about the community that I'm building through Zoom online teaching. I've been teaching online all semester. And Matt, to what you said, being very, very strategic about it, I may not be spending any more time having those little conversations, but I have to spend a lot more time making sure that I have those conversations. And so in terms of what I am teaching, I have the content, but then I also have to be thinking about how do I make sure that I'm not only a box to the students. And we have instituted, if you haven't used Zoom breakout sessions, they're brilliant. One of the chat ideas was bring your group together and ask a silly question once a week and break them up into smaller groups. You actually still have a little bit more of a one-on-one. A student at Pomona created effectively a speed dating type app just for talking to students with them. It's not speed dating, but it's these really, really quick 2-minute conversations, and they go through and it replicates somewhat in a virtual environment what a coffee cooler conversation would look like. And it's been effective. Pomona's been doing this since March of last year in terms of making sure that we had community, because we are all more than talking rectangles. As I promised, I am trying to catch up on questions. And Diana, would you say something about, from the league or system-wide perspective, are there new things, programs, initiatives that are going on that all credit unions are trying to team up on to help batten down the hatches?
You know, I can't say that there is a thing. I can say there is a lot of communication and collaboration among credit unions. I have a problem with, or I had a solution for. Certainly for credit unions, the payroll protection loan program, most credit unions were not in the business lending space, and credit unions really all across the United States stepped up and served those smaller businesses. And I think what we're seeing in those credit unions today are those businesses who never wanted to pay attention to a credit union before, all of a sudden realized they were there for them. So I'm seeing a lot of innovation and product around some of the new things credit unions did. And credit unions are pretty excited that they're moving into a next set of opportunity versus just all consumer. So that's not a good answer to the question. I probably could sit here for an hour and say, oh, and Eric did this, and oh, and Matt did that. But there's just this tremendous amount of collaboration and discussion about how what somebody's doing and how it can be replicated in another credit union.
And I'm also watching on the chat here. Has there been a specific product that you rolled out only for the pandemic? And do you have a sense of how you're going to roll that product back in at the end of the pandemic?
We actually instituted a emergency pandemic loan, and to qualify for that loan, we changed our underwriting guidelines significantly. There were almost no qualifications other than they could have not been delinquent with us recently. And we did that loan only for $500 per member. And I know $500 to a lot of you might sound like, well, that was not enough. A lot of our members, that's what they pay in rent. And it's because they don't rent an apartment, they don't rent a house. They rent a small room in a house that they share with 3 or 4 other families. So we want to make sure there was enough at least to cover them for 1 month's worth of rent for the majority of our members. We started collecting payments on those loans as well, and the entire portfolio of those emergency loans is performing. We have 0 delinquency. I think with the membership that we serve, they are very loyal, and when you give them a hand up, because it's not a handout, it's a hand up, they always perform.
I would say that we didn't necessarily implement a lot of new specific products. I mean, there's the obvious ones like the PPP loans, and we had some emergency relief funding things that we did through the state that were brand new. But what we did see is a substantial evolution in some of our existing products. We already had existing products for workout loans for people that were in difficult circumstances, or skip payment options, or things like that were already in place. One thing that really ramped up was we have something we call the Heart Fund, which is for employees. It's Heart, H-E-A-R, helping employees at rough times, I think is what the acronym stands for. That is employees at their option contribute to that with each a few dollars from each paycheck. And so we have a fund to help other employees. And through the pandemic, with people struggling, well, and I don't need to tell you all the things that people struggled with, but then also that same fund was able to help a few of our employees that lost homes during those wildfires I mentioned earlier. And so the activity in that fund ramped up substantially and was doing different things than normal. It's unusual to have to go replace beds and washers and dryers and stuff for homes that burned down. But that was the type of thing that we were doing on those things. So I don't think it's necessarily new products and services, but the ones that we have evolved and were much, much more heavily utilized. And so I guess in terms of rolling them back, I don't see a need for that. There's always going to be some type of need that those same products and services will fulfill. It's just right now there's a lot more of it.
Can I ask a question, Michael? Because I'm probably the only one between Michael and I that don't work inside a credit union. And so I have been having to access my credit union very remotely. What have you learned about your processes, and have you changed processes given all of this disruption in our old ordinary world?
Yeah. We've learned a lot about our processes. I can tell you that. And this is the only time, Diana, you will ever hear me say I'm grateful for the pandemic. This is the one time when we had to evacuate our headquarters because it was in the evacuation zone for the wildfires. Normally, that would have been us telling about 200 and some odd people to go home and operations stop. Instead, most of them were already home, and there was only a couple processes we had to figure out. So there's a lot of things that now we know we can do remotely that we didn't know we could do before. And so our processes have greatly improved. We were also, I guess, really fortunate in timing. I'm not going to take any major strategic planning credit for this one, but right before the pandemic, we had just finished out rolling out a massive implementation of express video teller machines. We had just implemented a brand new internet banking system that had a lot of application features that the old one didn't have. We had just implemented an appointment scheduling system, all of these things that literally we wrapped up in like November, December timeframe. And then suddenly we went from 0 utilization on all those things to like off the charts utilization. So we were really, really fortunate on our timing on those things. But yeah, I think the biggest takeaway is we can do a lot more remotely than I originally thought we could. I still am not a massive fan. And it's for the reasons we talked about earlier. I would much rather get people in a room and look them in the eye. There's just a different energy, that comes from that. But being remote doesn't scare me the way it used to. We can do a lot.
Very similar to Matt. We actually learned that a lot of the functions that we were doing at the office can be done somewhere else. As long as you have access to a secure computer connection, you can VPN into the office and just you're able to do just about anything. We, something that we had a disaster plan like many credit unions do, but you have, seldom do you have to actually take that plan, dust it off, and put it into play. And there was a couple of things that we learned. I mean, for example, is we did not have in the plan a process to forward our phones to someone else. And as we reduced staff at the branch, I had to take phone calls. So we actually had to quickly adapt to that and make those changes. So I can tell you that as a result of the pandemic, our disaster recovery plan is stronger and is better. And I think will prepare us for, hopefully we won't go through anything like this again, but for any other potential disasters that might come in the future.
Did you increase your call center? I know, again, I'm very, oh, here comes my dog, sorry. But on the member side, I refinanced my mortgage and it was very painful, but it was early in the pandemic. Have you found out some of your member facing processes were really clunky and you needed to change them? Or were you guys just perfect?
Yeah, of course. There was nothing. There was no processes that needed improvement. No, of course, we knew that there was weaknesses already, though. The pandemic did stretch those further, and so we, as I mentioned earlier, we're already in the middle of a core conversion process and of some other things. So we were already addressing a lot of those weaknesses we knew that were there, but the pandemic did stretch them further. And to your point about call centers and other things, ramped up substantially. In fact, some of the I mentioned that we closed down our branches for a few weeks was all, but we did that and we transitioned those people to the phones. When we reopened the branches, we couldn't transition them all back immediately because the phone center was just slammed with volume, right? And so we are definitely seeing that shift that was already naturally occurring towards more digital services. This certainly expedited that further, although we have seen it come back, but not to the same level it was before.
Sorry, Michael, I didn't mean to co-opt that, but I was just very interested because I'm not inside a credit union anymore.
Actually, I think panels work best when they become a conversation. So if Matt or Eric, if you want to, put your fellow panelists on the spot, Matt, this will make sure you don't have to go middle or first. I do welcome that. I do want to highlight a couple of the brilliant ideas that we've gotten via the chat. So one credit union rolled out a credit card specifically during the pandemic based upon the members' previous history, low rate, and no payments for 90 days. Another credit union was already rolling out virtual banking with video appointments. And that might be a way to get a little bit more one-on-one for an older population, particularly who really shouldn't be going into our branches at this point. I will spend a moment catching up on the chat again. I will give you, this is something I've been thinking about. 5 years from now, we're going to be in a different place than now. And I think right now we are very much focusing in on net interest margins. We're thinking about the job market's effects on our members and unemployment and reduced hours. And that's top of mind right now because that is the day in, day out of what we're seeing. Is there a different issue that keeps you up at night about what you think the world or the credit union movement is going to be looking like 5 or 7 years from now, which is not just interest rate margins and unemployment of our members? Is there another change that in the midst of our day-to-day fires, we really have to keep an eye on these other things?
I serve on the CUNA Small Credit Union Committee, and what keeps us collectively, most of our committee members up at night, is the ability for small credit unions to survive, but also to thrive. I think small credit unions are a critical component of the movement. This is my first time working for a small credit union where we have 5 staff members, $6 million in assets. But at the same time, because we can make decisions very quickly and make changes without going through typically the layers of management and red tape that we have at larger financial institutions, and that just happens to be how we operate, we can react and help the community quicker, faster, and sometimes a little bit better because we create those personal connections. So I think the survival of small credit unions is key to the movement. When we go to Washington and we speak to legislators, when small credit unions talk, somehow legislators pause and they listen. And I'm not trying to diminish what large credit unions do, because in all honesty, Comunidad Latina will not be around without the help of Schools First. Schools First Federal Credit Union provides so much help to us that, you know, we are grateful to them every single day. Without them, we will not be able to do the job that we do. But what keeps me up at night is that the fact that small credit unions are disappearing at a very rapid rate, and somehow we have to create mechanisms, either through cooperation or sharing resources, where we can have a system that can sustain those smaller financial institutions.
Yeah, and I don't look at the credit union specific what's happening, but I'm looking at what the consumer trends are in the young generation, because face it, these panelists that we have right here, we're on the older side of young. And what I really see is if we don't up our game in electronic delivery and really rethink product, if you go out, and I challenge you all before you come back to school next July, let's go out and live in the fintech space, in the banking space, and look at the products and look at the ease of service. And we need to start thinking like a fintech instead of thinking like a traditional credit union. Consumers today, young consumers today, don't understand what a checking account is. They could care less. They just want a card that allows them to transact. You know, and how do we restructure what our deposits look like? What is it? How do we restructure what a loan looks like and how you get that loan? So I just challenge you. I worry more about our survivability downstream with new members versus what we have today in our survival. And I think you're right, Eric. I mean, there is going to be financial pressures, certainly in 21 and 22 as we overcome this. But I know we can get through that. I want to make sure we live another 100 years. So I just really challenge us to think different on how we deliver and what we deliver and what it looks like and what we call it. You know, my daughter still wonders why she has a checkbook. You know, and in fact, she needed to write a check, and I've told this story, and then she's going, "Where's my checkbook?" And you know, thank goodness I had kept it for her. But I'm pretty sure in her life, she's never even ordered a second box of checks, and she's 39 years old. So anyway, I'm off my soapbox.
You know, first, I'd like to validate what Eric said. I have that same concern. You know, when you start adding all of the regulatory oversight and burdens and the technology requirements and the audit and, you know, regulatory requirements, all these things are so incredibly onerous on all of us, but even more so on the smaller credit unions. I too fear for them. And I also wholeheartedly agree that we need small credit unions and part of the movement. So we need to keep that on our radar. But before I go into kind of what my list was, I want to say I'm incredibly optimistic for the future. I think credit unions have a unique position right now where, you know, and if you go back over the last 15 years or so, you know, we came out of the Great Recession really positioned wearing the white hats. The banks were, you know, pariahs back then. We had a really good position. We've kept that political motivation. Most politicians on both sides of the aisle have a very favorable view of credit unions. We were able to reward that trust with expanded growth with those members. And now we're becoming more and more known, where credit unions aren't just kind of the subset that my uncle that's an IRA worker can be part of. You know, what people really know about credit unions. We're building trust. And if I could name one thing that I think is the biggest key to our future success is trust. We're gaining trust in our communities, trust with our members. They want to work with an institution they feel like they can be part of, that gives back to the socially gives back. And we're really well positioned for that. And so I'm really optimistic about the future that credit unions hold. So with that said, though, now the question was what keeps me up at night. You know, I wouldn't answer that question well if I didn't go to finance stuff, right? I mean, that's what I do. The one financial thing that really concerns me is interchange income. And I've been saying that for a decade. And I've been wrong for a decade, but so, you know, just like a broken clock's right twice a day, I will be right eventually on this. You know, if you go back far enough, we were concerned about decoupled credit cards and the things that would happen on that front. That didn't really pan out. Then we were really concerned about Apple Pay and Samsung Pay, and those things ended up linking to debit cards, so we didn't lose as much of it. And then we were worried about all these apps that came out, and the apps, rather than most of them, not all of them, rather than doing their own thing, they linked back to debit cards, and that became the norm. So we've dodged, in my opinion, we've dodged a bunch of bullets. But there's more bullets to come. You better believe that when that much money is coming out of the merchants' pockets, they're going to continue to tackle that. You're already seeing incentives to move to ACH. I think that will increase dramatically with the new same-day ACH programs that are going to be rolling out in the coming years. I would encourage everybody on this call, go take a look at your income statement and figure out what portion of your income is coming from interchange. If you're like most credit unions, that might take you negative on your ROA. That's how much money is coming in from interchange. It is a huge chunk of money. And if that went away, we're going to have to figure out other revenue sources and figure them out quickly.
I am backlogged on questions in the chat. I can't help myself. I'm sorry, I'm a macroeconomist and a labor economist. I wanted to throw in, there's two issues that keep me up at night. The first one is we are not going to go back to the same type of world that we left in February 2020. And so when I think about structurally how the macroeconomy is going to respond to this, there is simply going to be more working from home. There is going to be, even, you know, X many years from now, everybody's vaccinated, this thing is done, and that cannot come soon enough. We have learned things, some things are better in this world, and I think the number of branches per member, the way in which all companies and industries serve their members or serve their customers is going to be radically different. And any sort of mindset of, okay, I'll just get through this and get it back to the way it used to be. We're not going back to the way it used to be structurally. I think the second thing I think about is what we've seen in the last 3 recessions is jobless recoveries. They talk about this as a K-shaped recession. And so yes, for college graduates, unemployment rate's only up 1%. If you're a white collar worker, likely you can kind of work from home. This has decimated the service industry. More than half of families earning less than $40,000 have either had one of their members completely lost their job or hours cut back. There's been a segment of the US economy just deeply destroyed by this recession. And what we've seen the last 3 times is when we started to recover from the recession, that's when employers decided to hire capital instead of hiring the same workers back. So if you don't go through a recession, you keep hiring people to work the cash registers at McDonald's. You go through a recession, you lay a bunch of people off, and now when you want to rehire, you say, well, I'm going to hire an iPad instead of hiring that worker back. And that's what's causing these to be jobless recoveries. This has been a tremendously severe recession, worst unemployment numbers since the Great Depression, worse than '82. We are not going to have the same jobs coming back as we have now. And so making sure that we're thinking about that. And Eric, to Eric's point again, smaller credit unions, because you have, you know, a very laser focused on your segs and on your members, may be more poised to respond earlier and quicker to exactly what your members need in the not same economy that we're returning back to. Sorry, I couldn't help myself but jump in some of the research I'm working on. I wanted to ask, curious about your perspective on how the election results will or won't affect credit unions. I don't want to get into red or blue talk. I just don't. But what I do want to get into is we learned something about regulation after the '08 recession. Eric, you've served in the previously named DBO. How might we see regulation being an issue in the years ahead as a result of what we saw then and kind of what we're going through now?
I think we actually expect more regulations coming our way. especially from the CFPB. I mean, there's no question about that. That is just a matter of time. And I think as credit unions, we need to start collaborating in meeting these regulatory requirements, regardless of your size. It is very difficult to go at it on your own. We need to find ways to pull our resources together so we are not killed by regulation.
I think, and we already see that at the association level. So you can talk to any one of your league presidents, or NCUA. Now, once the election is set, Todd Harper will become chairman, and he's a Democrat, and they have a very different. He has a very different view on what the current board has. I think we're going to see more regulation. He's talking about increasing or having to pay into the insurance fund, which when credit unions are stressed are going to hurt. At the state level, I don't know about all of your states, but California decided to go crazy this year. And so they're trying to legislate things that just business should be able to work out. So we're going to see a lot of things coming down at the state level, not just at the regulatory level. And I do fear that all of that's going to put a lot of pressure on our credit unions and on how we operate and what we can and cannot do.
Yeah, I unfortunately have to agree. I think we're in for deeper regulation, a lot more regulatory oversight and burden. That being said, I will put maybe a little silver lining on that cloud, Michael. I think that some of on some very specific issues, when we would go back and talk to folks in Washington about issues that we had, for example, with the Dodd-Frank Act or something like that, because of the hyper-partisanism, it was don't touch it or repeal it. There was no middle ground. I do think that we might be in a situation where legitimate concerns that we can agree on could be tweaked. I think there's some evolution in some of that maybe we could make some headway on now that it is, but maybe that's just me being Pollyannish. We'll see.
I want to be on your Pollyannish train there, Matt.
And I think what you said, Matt, previously about white hats, I think credit unions were early to respond to try and help our members. We didn't do it because we were forced. We did it because that's our DNA. And I hope we get viewed somewhat with white hats in the future of way increased regulation. That must come. $3.5 trillion deficit spending this year. There's gonna have to be something's got to happen.
Yes. I'm going to use my league hat here. Yes, credit unions have done remarkable things. The legislature, both the federal and the state legislatures, don't really know who we are. We have battled them this year. It's been incredibly instructive to understand. Even our longtime supporters don't understand our structure. So to think that we're going to be able to walk in and say we did X, Y, Z, I will tell you the bankers are going to walk in and said we do X, Y, Z. So we have to learn to tell our story differently and to educate them. They didn't understand a not-for-profit. We were going to get thrown in with the CARES Act, all credit unions around the United States, because they didn't understand that our capital didn't belong to us and that we couldn't just make capital appear by going out to shareholders. So I agree. I think we have a great story to tell, but I think we have to think about and retool that story about real impact and how we're different, not that we just are different. Not-for-profit just seems, that's a word they don't get. So anyway.
I completely agree with that, Diana, and I'll add to that. I'm sure we're not alone in Oregon, but the amount of turnover we saw in elected seats, where we lost a lot of long-term supporters, and we have good relationships with the new folks, but that education process you're talking about happens every election cycle. This time seems even more dramatic than most, where we've got a lot of folks we've got to educate about credit unions.
Diana, are you at liberty, or might it be instructive to talk a little bit about, I heard some things in the California state legislature about eviction and moratoriums and how that might continue to play out, because for a while, there were some federal mandates, and that also would completely affect us through a regulation side.
Yeah, well, and I don't know that I have anything new to say. The legislature, thank goodness, is on break, and the new bills won't come back until February and March. But in California, we've got, the governor has put a mandate on no evictions. They did, and we worked with the governor's office and the legislature, so credit unions or portfolio lenders are out of this current bill, but the bill's gonna need to be paid. Right? You've got tenants that can't pay, that haven't paid rent. You have owners of these buildings, whether they're 1 to 4 family or commercial buildings, that aren't getting paid. And I think we're going to get pulled into some of that somehow. And I don't know how that plays out. But again, that goes to the education piece, is that we need to be talking, we need to know what's going on in your communities. You need to know what the eviction rates are in your communities. You need to know what the number of forbearances and delinquents, and plan ahead. Because the last thing you're going to want is your legislature to open and say, we need a bill because this is a problem. And you can't walk in and say, wait a minute, we're not the problem. But you need to walk in there saying, this is what we know and this is what we're doing. When we get caught flat-footed, we will lose. And I know all of you are doing remarkable things for your members and your communities. And legislators are just, they're grabbing at straws. and sound bites that sound really good, right? You listen to, everybody names things cleverly. The bill in Washington, D.C. that we're waiting for, new stimulus is the HEROES Act. And there's an acronym that goes with all of that, but the CARES Act, community and whatever it was. So we just have to be better and be prepared.
Wait, Diana, you're using acronyms? Oh
No.
my gosh, we are in a crisis.
And I told you I couldn't even tell you what they were. So it's, acronyms are trash. Everybody knows I hate acronyms.
Question on the chat line, kind of a specific one. We seem to be bleeding loan payoffs, mainly mortgage from fintechs. How specifically might we combat this bleeding, especially as deposits grow at an unbelievable rate?
I go back to, we've got to make our processes easier. The mortgage refinance I did, and I was the CEO of that credit union, so they even knew who I was the most painful process. And if I didn't love my credit union, I would have quit and gone somewhere else. So I think you need to look at your process. Fintechs make it easy. In 3 clicks, you can get approved. The documents come there. I mean, I can't even tell you how long it took to close a refinance on a loan they already had. And I think you all need to look internally at your processes. And you asked where my success or how I got to be where I was. When I knew something was broken, I fixed it and didn't ask permission. I fixed it and told them. And you know what? Your managers will appreciate that you fixed it and told them. But don't wait for somebody else to solve the problem. You are all capable of identifying what those stumbling blocks are, and you need to address them. Now, Matt's going to tell you, oh, but you better ask me.
No. That honestly, I was back here cheering, Diana. As a leader in a credit union right now, I absolutely love it when people walk into my office and say, hey, we have a problem and here's what we did to solve it. I love that. So no, go do that. And well, I want to echo what Diana's saying. We can't look at fintechs as some strange thing that we're competing with. They are the competition, right? We have to start looking at folks like Amazon as a model of how we do business, not as some other. I mean, we have to change how we do things, and we've got to understand that traditional services aren't going to be the same in the future. And here's a little. I don't know. There's no regulators in the room, right? I can say this out loud. Yeah. Honestly, regulation has saved our butts over the last decade. It's the only thing that has kept the technology world from just steamrolling us like every other industry that's been steamrolled by technology. because they couldn't do it from a regulatory perspective. They're gradually figuring this out. They're partnering with institutions so they can overcome the regulatory perspective. And it's going to start getting real really fast. But the bottom line is it's taken longer than it should have because they've had to deal with regulation. So this is not going away. We need to figure it out. And quite honestly, we need to do a better job of being completely seamless, easy, straightforward with our members through our improving our existing processes. That has to happen.
Yeah, we have to be better at delivering products and services faster in how the consumer wants them, not how we want to deliver them. And I think that's one of the challenges that we have as credit unions. We always create these boxes. This is how we're going to do it. It's not about us. It's about the member. What are their expectations, and what is your competitors doing to meet those expectations? And you should not be equal to them. You should be better than the competitors.
And I always say, be the member. Don't ever do anything. I mean, everybody goes behind the teller line to do something, or you talk to the loan officer. Be the member. Fill out all of those pieces of paper that you give to the member. Figure out how many hoops you have to jump through. And then when you're mad enough, fix it.
Yeah.
Fix it. Because it's ridiculous. And what happens is, oh, we had a problem, and so we add a form, or we add a signature, or we add a process, and we forget to subtract.
Yeah. Well, let me say one other thing on this that might be encouraging, I hope, for smaller credit unions that are looking at this going, we don't have the resources to go do all of these technological advances and other things. And this is where maybe some of us on the panel might disagree. I do not believe that we have to have the absolute bleeding edge technology. That's not what we need. We do need technology to a point that it makes things seamless, right? And it needs to be, we need to be to that minimum level, and it needs to be solid. But I think what the real key to loyalty with our members in the future is going to be when a member comes across a transaction that they're not used to, or something that scares them, or the technology breaks down, or something causes them to be in a moment that makes them uncomfortable or frustrated, and they reach out, and then they get a person. And that is the moment that's going to matter. It's the call center employee, it's the branch employee, it's the whoever that is that helps them when, and it's not hard to think about these moments. It's somebody in their family dies and they don't know how to deal with a deceased member account, and they want to talk to a person because it's emotional, or they're buying their first home and they're just not comfortable doing it online. They want to talk to somebody, or, and you can go through all these different scenarios. Those moments are the ones that are going to really matter. And if we solidify those moments and the technology is good enough to keep them happy in the other moments, we're going to be fine. We don't have to be bleeding edge.
So we are in the middle of kind of as a country analyzing is everybody getting a fair shake? And so I wonder if in your organizations, in our last virtual kind of conversation, we talked about really measuring. If you want to make sure that you're really serving the underserved or serving communities that might not have been previously served, you got to measure it. Are your organizations doing anything specifically to make sure that we as credit unions or as your organization are serving all the potential people in your area?
So for us, Michael, serving the underserved is our mission. That's our passion, and that's what we do. When I came over, I tried to retire prior to coming to Comunidad Latina Federal Credit Union, but there was this small credit union that was actually trying to serve this segment of the population, and they were failing. If you look at our history 5 years ago, we were shrinking. We had a negative ROA. Everything was going in the wrong direction. And my sole purpose was to prove to the greater credit union community that serving the underserved and serving this population is not only the right thing to do, but also is a profitable endeavor for a credit union. And I'm happy to say that we actually have billion-dollar plus credit unions come to our credit union to learn how we do IT and lending. And I'm not going to forget a story. We had a group of folks from Altura Credit Union come and learn how we were doing IT and lending. And I don't think in their mind they really understood how small we were, because as I mentioned before, we occupy less than 800 square feet. When they came to learn how to do this, they actually had to deploy 6 staff members, and we had to ask them to happily take 3 of them back home because we didn't have the physical space to accommodate them plus our members. But I think it's important that we don't lose sight of helping those that need the help the most. And you don't have to lose money when you're doing that. If you structure your products and services correctly, you're helping the individual, but you're also helping the bottom line of your credit union.
Amen.
Well, I challenge all the credit unions, and I don't know anymore, but it looks to me when I look at credit unions, the minimum loan amount for an unsecured loan is $1,000. And I talk to credit unions and they go, well, if we make small loans, they'll default and it's a lot of work for a $300 loan. I challenge you all to get rid of those loan limits and make the loan that makes sense for the person that needs it.
Amen. 25%, 24% of our loans, to be exact, are for $500 or less. 24% of our loans are for $500 or less.
And because we always, I hear everybody go, why do they go to a payday lender? Well, if all you need is $250 and the minimum loan's $1,000 and you have to qualify, of course they're going to go to a payday lender. So I just challenge you, risk more, fail faster, and challenge everything.
What I will add to that, Diana, is also credit unions many times establish limits that we will only lend on vehicles that are 10 years or newer. Throw those out the door. We actually do auto loans on vehicles that are, we will do an auto loan on a 1995 Toyota Tercel. If it's working and the member's using that vehicle to commute to and from work, they're going to pay on it. And yes, it's going to be a $1,200 loan, but it's a $1,200 loan that is making an impact for somebody.
Yeah, I agree. The adage that we use is, I've never seen a car make an auto payment, right? It's always the driver. We're lending to people, not to vehicles.
Unfortunately, we are starting to move towards the end of our time together. I have gotten a couple questions in the chat about WCMS 2021. As you know, given the state of the world last summer, for the first time in WCMS's history, we postponed the school. That was the right decision. We would never want to do anything that put our students in jeopardy. I can tell you that the president of Pomona College is heading the task force in the state of California for what it would look like to safely bring students back to campus. She's also one of the people heading the national liberal arts discussion in terms of how to bring students safely to campus. And Pomona College may be bringing students back to campus in the spring. They've changed air conditioning, ventilation, they've changed everything on campus. There is a testing lab that has 6-hour results. There is a nurse on campus. And so Pomona College is looking at that possibility. That said, Pomona College is located in LA County. LA County is one of the hardest hit places in the country. And even if it may theoretically be safe to bring people back to campus, it may not be the right time to ask students to travel. And it may just not be possible to ask students to travel. So our Board of Trustees will be gathering on December 8th of next month, and we'll be acting to make a choice of what WCMS will look like. I can say that we have plans, if it is possible. Obviously, there would be lots of distance in terms of bringing students back to campus. At this point, it does look more likely as though a virtual program would be the only real safe option for our students. But I can absolutely announce WCMS will happen in the summer of 2021. And not only do we have a commitment to make sure you're safe, we have a commitment to make sure that WCMS is what WCMS is, which is the learning in the classroom, the applying it in your projects, the going home and being a changed leader because of what you have learned, but also the network and the relationships that you form with your fellow credit union leaders. I'm sure if I asked these 3 alumni, do you keep in touch with people you went to school with at WCMS? Look at those smiles, right? It's not WCMS if you only log on to Zoom for 8 hours a day. And I can guarantee you, you will not be logging on to Zoom for 8 hours a day for 2 weeks straight. That's not how you best do these things. And so if we do bring you back to a virtual WCMS, it will be an experience that was designed to be virtual. It's not going to try and be taping on a in-person experience and try and kind of mimic it. It will be an entirely changed. And you might have heard a little bit that I've been working with at Pomona College to see best in class of how to do that, both at the undergraduate level, and then I also have contacts at the MBA level. Because in MBA programs, those are as important for the networking that goes on. And we have MBA instructors that teach at WCMS, and we are going to be using best in class if that is the route that we need to go down. So that is the answer that I wasn't quite ready to give, but we got the questions in the chat. May I ask our panelists, do you have any closing words for the next generation of credit union leaders that are on this call now?
Why are we staring at one another? I will just say to you, you are the future. Your credit union has invested time and money to send you to WCMS. Take everything that you've learned here at school, apply it to the work you do, and just keep moving forward. You are that next generation. You're the people with the ideas. When somebody told me to do something with, I can't even tell you what they were telling me to do with technology. Setting up my home office, you would think would be easy. No, I had to have about 15 phone calls to get it working. So forget the old people. Take what you learn, risk, and again, just make things happen. You're going to be marvelous at what you do. Eric and Matt and I did not get to where we were without WCMS, and you too will be outstanding leaders in the movement.
I think you're on mute.
You're muted, Eric.
Use the tools that WCMS is providing you and take advantage of them. To echo what Diana just said, I will not be where I am without WCMS. That not only changed my career, it changed my life. So make sure you're passionate about who you want to serve. Don't chase the dollars, chase a purpose.
Be optimistic. You're in such a great place right now. And I know it's hard, but I bet if all of you take a step back for a minute and look back at 2020 in terms of what you've been able to accomplish, what you've been able to overcome, the resiliency. If I've learned anything from this pandemic, it's that people are freaking resilient. They can figure it out. Give yourself some credit for that. Add to the tools what you've learned through this and through all the experiences that you've had this year and through WCMS. Your career is positioned very well, and go make something happen with it. I love what Eric said, make an impact. Go be passionate about it. And by all means, don't allow WCMS. You think about the people that sacrificed to let you be in this program, the money that went into it, the work that you put into it. Don't let WCMS just become an academic exercise you once did. Take the things that you've learned. Right now, write down a couple of things that you really want to make sure you take away and stick it on a Post-it note on your mirror in the morning, whatever you got to do, but remember them, enact them, go after them, do them. And the careers, the movement, your members, they will all benefit from it.
Next week is Thanksgiving. I am thankful that your members invested in you to bring you to WCMS. I'm thankful for your colleagues and your families that took on extra work to bring you to WCMS. But mostly, I'm thankful for the experience of getting to learn with you. I am thankful for what you are currently doing to serve your community. I am thankful for what you will be doing to serve your community. I am also thankful that none of you are going to take your projects and let them gather dust on the shelf. Please, please put them into action. And that is how you earn the highest distinction, that you were a leader for good, that you made a difference in your credit union. So thank you very much for your time. I hope you have a very, very relaxing, rejuvenating, and grateful Thanksgiving next week. I look forward to seeing you one way or another next summer. Or this
Bye,
summer.
Thank you, everybody.
Good night,
Bye.
guys. I missed you.